Now, before jumping in altogether, I want to go over something really quickly that I get a lot of and I see a lot of because it's very common in different practices. And that is, are there any good books that I recommend for trading? And my answer is I don't know. I personally, just a little bit about myself, I am pretty much fully self-taught. I never read any books really on trading. The only book I did read long ago was Day Trading for Dummies, and that just taught me how to set up an account and all that stuff. But as far as technical stuff like that, I really can honestly say that I never read anything on options or trading strategies. And one of the reasons I did that is because I didn't want to learn somebody else's theory. I learned from just kind of at a young age that I felt like when I saw the market and the marketplace in general, I realized very early that it was a very unique place, and that's what appealed to me about it, is its uniqueness. And so my advice to people who are looking for books or something like that, the best book to read is the market, and it's open every day, and you can read it every day, and it's a book that you never stop reading. So I advise people, I know a lot of you have day jobs and stuff, but even if you can't trade, that doesn't mean you shouldn't watch the market. I can't tell you how many times I sit here and don't even trade. The days I'm really quiet and you guys wonder if I'm trading anything, I'll always tell you if I'm trading something, okay? So if I'm not, I'm just watching and I'm picking up. I'm learning different things. I'm just staring at level 2s, trying to see, what else I can pick up as far as, supply and demand and the way a stock trades and this whole concept of getting to know the market like you get to know your friends. The more you know about your friends, the more you know what they like and they don't like, and the better you can treat them based on that. And the market is the same way. The more you get to know the market, the more you'll know what it likes and doesn't like. For instance, recently I've been watching the VIX. The VIX doesn't like going below 16, and it doesn't like going above 18, okay? In the long term, over the last couple years, the VIX kind of likes making random spikes up to 50 or so, but it doesn't like staying there for very long, okay? And also it likes going down to 15 or so, but it doesn't like staying there for very long either. In general, it kind of likes to be between 18, 20 or so, 16 to 18, with various spikes. Sometimes it'll muddle between 20 and 30. And when the VIX does that, that's when it's telling me that something's wrong in the market, that maybe we're going to jump into some turbulence, okay? That's my friend telling me that something is bothering him, okay? And if we look at a chart right now of the VIX, I'll show you, and we can just observe just what I said, that, in my, just from knowing my friend, the VIX here, it doesn't like staying up above 50 very long, but it makes moves up there every once in a while. Well, here we go. Over the last 4 years, you can see the VIX made a move above it, didn't stay up there, made another move towards it, didn't stay up there, made another move towards it, didn't stay up there. And then once it creeps above that, in that 20 to 30 range, that's often when you see big moves happen. You saw that here in September of 2008. You saw it in April of 2010, and you saw it again most recently here in August of last year. And also, the VIX, it'll go down below 16, but it doesn't like staying there very long. Okay, you've seen that numerous times. And that's just one example. I don't imagine there's many books out there that will tell you what I just told you about the VIX, okay? Because books are going to teach you theory and it's going to be based on models and whatnot. What I just told you is based on what the VIX does every day and how I've observed it over the last couple of years. And once a book is printed, they have to come out with a new edition. So unless they're going to keep releasing new editions, I just don't think books do a helpful job in teaching you about the market as much as just watching the market and being a participant in it and being very observant does, okay? So I use the VIX as an example, but you know, if you watch stocks long enough, a certain stock long enough, you'll be able to come up with the same theses for that particular stock. So just wanted to touch on that because it's a good question, because usually when you start a new career, which trading is, you know, you want to read up on your career. You know, if you're going to go into advertising, you want to read up on marketing strategies. But the market is different. It's unlike any other career out there. So that's what my advice would be. Okay, first question is going to be a simple one, and my answer will disappoint this person. Could you talk about your thoughts and plan for the Facebook IPO? Yes, I think Facebook is not a company I would want to invest in. You know, so I don't plan on buying it. I'm just not about what's going to go on. I mean, you look at IPOs, what happens is they fix them at a price and then it opens up 100%. I just don't like doing that. I don't want to be the guy putting profits in Mark Zuckerberg's hands, just like I didn't want to be the guy putting profits in Eric Lefkowski's hands on Groupon, or Peter Thiel's hands on LinkedIn, although he was just a major shareholder. So it's kind of a stubbornness thing for me. Even though I know there's going to be a great trading opportunity, IPOs, high-profile IPOs like a Facebook, they're legal pump and dumps in my opinion on a big scale. So yeah, I have no plans of trading Facebook really. Maybe that'll change if I get lured into it once I actually see it start trading. But yeah, sorry. Second one, how do I delete a ticker out of my watch list in eTrade Pro? Simple enough. So here's our watch list. So you want to right click on settings, and then, you know, to add a couple tickers, all right? So now here's our watch list. We've got Apple, Priceline, Google, and Amazon. But let's say that one of them moves too low or moves too high. You know, whatever criteria that got it on our watch list is no longer true. So therefore, we want to take it off our watch list. So it's very simple. You just right click on settings again, and you highlight over it, and you click delete, okay? And that gets rid of it. So again, right click, click settings, and then select it and click delete. It's pretty straightforward. Good thing to know though. Here's a good question. In options plays, when you're expecting a huge move, why do you not hedge your puts or calls by buying calls just in case it goes against you, or buying puts or buying calls if you're buying puts? The reason I typically don't hedge is because I usually have a lot of confidence in my thesis for the trade based on the chart. And if I don't have a lot of confidence, then I'm typically not entering the trades. So hedging sometimes, in my opinion, can just be a waste of money. Okay? If you're not confident and you still want to put the trade on, that's you know, then you should hedge. You know, if you really want to put the trade on. And again, that's your personal preference. Are you a trader who is making trades when they're only 70% sure of themselves as opposed to 80, 90, 100% sure of themselves? There's nothing wrong with it. There's money to be made in both directions. And at the beginning, when you start trading options, you're not going to be 100% confident. It's going to be impossible to be so. And if you are, you're probably going to end up losing money, or you've spent a very long time watching and paper trading, which is what I would recommend. But speaking for myself, I know that's never the way I learned. I always learned by losing money and, jumping into the fire, so to say. So I know that it can be hard to practice patience like that. So if you are going to do that, and you are going to jump in right away, even when you're not ready necessarily, which, again, while I recommend paper trading and taking your time, I've been there and I know how badly you want to trade. And, this is different than forcing trades. Forcing trades is trading when there's not a trade setup, right? When there's not a good setup. What I'm talking about is you just haven't been trading that long, but you see what you think is a good setup and you're just a little bit nervous. And that's completely natural. And again, you should feel that way. And like I said, if you don't, then you're either a natural born trader or you're gonna really struggle. So being nervous at the beginning is good, in my opinion. And if you are, then that's when you might want to do some hedging. But the reason I typically don't hedge, like I said, is because my strategy personally, I'm usually extremely confident in my analysis, and I'll live and die with it, and I'm comfortable with that, okay? For example, on Green Mountain Coffee, which we talked about yesterday, I didn't hedge at all. So I bought puts, and if I would have hedged by buying calls, well, you can see every last call went to zero. They all lost 99% of their value. So I would have lost all my money. My puts went up, over 1,000%. So I didn't have any loss offsetting that. And that's great. However, today on Caribou Coffee, I bought the June calls, the 15s at an average of around 70 cents. And I didn't buy any puts. I didn't hedge. And as you can see, the stock is down. It closed at 14 and it's down an additional 14% to 12.75 after hours. So I'm going to get burned tomorrow. And if I would have bought puts to hedge, then I wouldn't have lost as much money. But again, it's okay because I made the trade. I was confident in my trade. It didn't work out. I'll pay the price tomorrow, and it is what it is, So this is a question that I can answer it given my personal opinions. But again, this is what makes trading so unique and so great in my view, is you don't have to do what the person next to you is doing. Trading is not like accounting, or engineering, where we're all getting the same results, where we all analyze the data and we all think the same thing and we're all going to act on that data the same way. Trading, we can all look at the same data and we can reach 1,000 different conclusions, and we can come up with 1,000 different strategies to use. So while I just gave you my personal view on this, just because I say I don't hedge, who cares what I do? Do what makes you comfortable. That's the bottom line. So if you want to hedge, then you should hedge. If you don't want to hedge, then you shouldn't. But just understand, just like I didn't hedge on GMCR and it did well because I didn't end up wasting any money on a hedge, I also didn't hedge on Caribou, and it's not going to work out because I'm going to lose, all the money on the call side, and I'm not going to make any money because I'm not hedged. Okay. So on to charts. First one is DOMK, DOMK. I like that. I like that ticker. I just like the name. It sounds like something Thomas would eat. for those who don't know, Thomas said earlier he only trades stocks that have tickers that sound like food. So anyways, so DOMK. Really nice volume today. Not as good as this volume here, but that volume was all-time volume high. This volume is the second highest volume it's ever traded. So in the grand scheme of things, still very, very good volume. And let's make it. Can somebody tell me what I really like about this period here from the 26th through the 2nd up until today? We'll zoom in like this. Anybody who's familiar now with my way of thinking, what might I really, really like about this action here after this big move? Oops. Yeah, prior day's low. And what Publicist said is, sorry, get rid of this window. Okay. It never went below the prior day's low. Yeah, you guys covered it all. Never went below the prior day's low. Low volume pullback, uptrend, and what G-Day says, I especially like, it held its gains. It didn't give up its gains. So that's very good. I like that a lot. And that tells us that a lot of demand came in, and the low volume pullback tells us that there's not a lot of supply coming out even after we had a big spike in demand. And it tells us that, so right away that tells us even after this big move, people aren't really taking a lot of profits. And then moving forward, that tells us that if we get another demand spike, the price will likely increase, right? Because anytime the stock holds on to its gains and pulls back on low volume, the next natural step is that if demand increases, then since it's held on to its gains, it should have no trouble making new gains, okay? So right away, that's what I like about this. We are coming up on this resistance, knocked it down today. You can see this 180 level was a congestion point here back in mid-March. And we've got this high here, which, let's see, is $2. This high here at 190, this high here at 185. What was today's high? 184. Okay, so 185 is key resistance. Need to break that. Above 185, I'd expect a test of $2, okay? As far as support, we want to see this prior high and, you know, maybe the tops of these highs that we just got above okay? I'm putting that line there because this was resistance. This area right here, we had congestion around there. So as you guys know, we want to see it now become support. So this means our support range is going to be 162-ish, 160 to 170, 171-ish. Closed at 176, okay? So we're not too far away from key support. Talked about our key resistance. Let's look at the intraday chart. A lot of volume towards the end of the day, which is a good sign because it makes me feel like, you know, if the market would have been open another 5, 10, 15 minutes, that we would have seen the volume continue to pick up, which means that the first 5, 10, 15 minutes of the day tomorrow, I expect to be pretty strong. And therefore, if they are not, then that would be a red flag. Whenever we expect something to happen in a bullish scenario and it doesn't happen, we have to reevaluate and consider if we were wrong in our expectation. Whenever you think something, whenever you expect something to happen as a bearish scenario and it does not, you have to reevaluate and consider that your bearish expectation was wrong. So right now, I am bullish on DOMK based on what I've outlined so far. So within the first 5 minutes of the day tomorrow, I want to see at least 120,000 shares trade. Now, within the first 5 minutes of the day today, it traded 75,000 shares, and in the next 5 minutes, it traded 88,000 shares. Can somebody tell me why I'm saying I want to see greater than 120,000 shares instead of just greater than 75,000 shares like we saw within the first 5 minutes today? Exactly. J. Ken has a very good point. And why is that? Why is that? Why are we going by what it closed by as opposed to what it opened by in terms of time? Right. I mean, we're always most concerned with the most recent volume. Okay? We're always most concerned with the most recent volume and the most recent price action. And no, in my opinion, and I saw the trade, and that's a good point, but no, in my opinion, it doesn't have an effect because we saw that volume spike here on a big move higher, and we saw that volume spike here on a big move higher. So if we want another big move higher, we need a similar volume spike. It's as simple as that, okay? If we're going to pull back to our support range that we outlined, I'd like to see it trade less than 60 to 90,000 shares on the 5-minute intervals, okay? Ideally, though, it shouldn't pull back much below this 168 level here. This was the low in the afternoon. It didn't go below 168 all afternoon. So if it goes below it tomorrow, I'd expect that maybe it comes down towards 160. So if we get our required volume that I just outlined, then I would look for the price to break 185, and then I would potentially target a move to $2. Above $2, you know, again, there's no resistance, so we need to just be logical. 210, 215, 220, 225, so on and so forth. UA, one of my favorites, owned this for a long time. Just a great chart, very healthy chart. Long term, it's just been on a monster uptrend, and it's only getting stronger. You can see this most recent uptrend here. It hasn't even come back to this trend line in a very long time. And it keeps making higher highs every year. So, I mean, you had the highs here in 2010. Here a high at 60, then another high here at 70, then a new high at 79, then a new high at 83, a new high at 87, and now here we've a new high at 98, and then now we cracked above 100. Volume overall is solid. It's increased as the price has increased. If you look at this chart longer term on the weekly chart, you can see 2009, 2010 was low volume. 2011, 2012, volume has been much greater. On a big board stock, what that tells me is that more institutions are buying this stock. And why shouldn't they? You've got similar stocks like Nike that has done extremely well. You've got stocks like Lululemon that have done extremely well. You've got stocks like Zoomies that have done extremely well. So remember, we've talked about before, hedge funds and institutions and mutual funds, they have so much money that they can't just buy one stock, because if they did, the stock would go bananas. So what do they do instead of just buying one stock? People remember what we've talked about in the past? Right. They spread it around within that sector. If they like a stock like Under Armour in the athletic apparel sector, they're going to buy other stocks in that same sector, okay? In general, that's just the way it works. That's why you see groups like Apple is making a nice move over the last 3 years, and that's why other technology stocks like Priceline, Amazon, Intel, Microsoft, Cisco more recently, but the point remains the same, okay? Because a trend in one stock in general results in a trend in that stock sector. And that's what you're seeing right now in Under Armour. I'm not seeing any signs that this trend will be coming to an end for Under Armour anytime soon. The volume, it's going up on high volume, it pulled back on low volume, and since it pulled back on low volume, it was able to recover on low volume. Key lows to watch. Okay, so this area marked resistance, and now it looks as if it might be coming into turning into support. So from a longer term perspective, I'd like to see Under Armour hold this low, which was 94.78. Below that low, you've got this low here is absolutely crucial. You have a double low, 91.65, 91.65. So 91.65 for this trend, for this move, is definitely the key trend. Okay. As far as resistance, it's pretty simple. This high here. All-time highs, that's where we need to break. Again, if you want to draw some trend lines, Under Armour's got a great one going on. So, you know, this trend line also coincides with these recent lows. I really like the volume pattern here, and it's just a good space. I own Under Armour long, and if I may brag for a second, I believe I bought it on February 22nd, 2010 was the exact date. And what's cool about that is that week ended up being the 52-week low at 25.16 or something like that. I bought it that week, so at any rate. So yeah, I've been long Under Armour since that point. I've bought it as high as 50 and 60. Haven't bought it since then. There's no need to mess up my average. But again, even though I'm up a substantial amount, based on the chart, there's absolutely no reason to sell this stock, in my opinion. That reason won't come until it breaks below some of these recent lows. Above this all-time high of 102.86, you know, 105, then 107.50, then 110. So GWBU, this is a good one that we picked out yesterday in chat. For those who weren't with us, we called it out right at this area here at 41 cents. So, and more than 2 million shares traded between 40 and 48. So everybody, there was more than enough shares available for people to get a good position. I really like this chart. Something is going on. Somebody bought a lot yesterday, and today it was able to go up on very low volume. So the demand wasn't that high today, but yet the price still rose 20%. What does that tell us about this stock right here? Right, lower supply. No, I mean, there's definitely, guys, remember, there's always dilution. And remember, dilution isn't necessarily a bad thing. Dilution is a part of the game in penny stocks. That's just the way it is. How does all this volume start trading? How does this volume happen? Yesterday. This is what we have. We have no prior history. So how does this volume start trading? How is it possible? Shares from the company, yes. Shares or shares from somebody when it's never traded before. And what does that mean? It's dilution, okay? So, you know, get it out of your head that dilution is a bad thing. But when dilution is bad is when they don't let stocks run, okay? Like UBRG, we saw yesterday there was a ton of dilution. We talked about it in chat. And then look today, you know, it was down 15%. ZNTR was another one that had a chance to do well, but, you know, today too much dilution, okay? So back to GWBU. So there's dilution going on, but what it tells me today is that the dilution was very small, if any, and as a result, what I think Publicis said, low supply, or maybe it was Is Blue Fox. Yeah, Blue Fox called out lower supply. And that is exactly what, what results in stocks moving higher on low demand is even lower supply, just as Blue Fox noted. Now, the thing to be cautious about is, just like we talked about with Under Armour, how the stock can increase on low demand because it pulled back on low supply. What's the risk with GWBU? What do you guys, what would we say is the risk with GWBU, given that it was able to move up on low supply, on low demand? Exactly. It doesn't need as much supply to pull back. Okay? It went up on low demand, which means if supply just picks up a little bit, it might end up pulling back more than we'd normally expect it to. Very good. Soon you guys will be teaching the classes. So that's the one risk with GWBU that I would be cautious about. However, you can't argue with the price action. Higher high, close near the high of the day, much better close than yesterday. Okay, yesterday into the close, it sold off. Today into the close, it got bought up and closed near the high of the day. So within the first 15 minutes tomorrow, we traded 300,000 shares within the first 15 minutes today. So I'd like to see 300,000 shares at least within the first 15 minutes tomorrow. Within the first 5 minutes, I want to wash out this volume. So we got to trade a good amount of shares. Let's get over 200,000 shares within the first 5 minutes tomorrow. That would be a good sign. If we aren't going to trade that volume and we're going to pull back, we want to do it on volume less than 80,000 to 120,000. And we want to hold today's low. Well, today's low is too far away. 52 cents, that's not a good enough risk reward. So we want to hold this afternoon low of 61 cents. If we fall below 61, we're maybe going to test this 57.5 and then this low here at 52. As for resistance, today's high of 67, then 70, and then, guys, keep things logical, 75 cents after 70. Overall, though, this looks great. Definitely very unusual activity. I'd be shocked if it was awesome penny stocks pick. I would be absolutely shocked, but that doesn't mean it's not a good sized budget and, that it can't go higher. We've seen STVF was a great play. That wasn't an awesome penny stocks pick. LUXR was a great play. That wasn't an awesome penny stocks pick. Okay? So don't not play a stock just because you don't know who's promoting it. Let the volume and price action do the talking for you. Volume and price action told me yesterday to jump into GWBU right away. Why? Look at this volume here at this price range. And if we look at time and sales, which I have up on my monitor at all times, okay, and we look at yesterday's volume, let's go back one day. Okay. Look at this time in sales. We had 100,000 at 41 cents, 250,000 at 41 cents, 100,000 at 41 cents, 200,000 at 41 cents, 231,000 at 41 cents, 60,000 at 41, 50,000, 50,000, 50,000, 50,000, 70,000, 100,000, 81,000, 50,000, 200,000. Okay? Volume like that tells me somebody somewhere with a good amount of cash is getting in on this stock. This is the type of liquidity we look for to clue us in that something good is going on. And it was volume as the price was increasing, which is the most important thing, because right away that tells us that, quote unquote, they are gonna let it run. Okay? Yeah, I mean, you got to think about that. Where are they going to sell? But that's why we sell on the way up. That's why I advise that. You definitely have to be aware of. Rondo, we have a video from class. If you type in this exact statement, I'll show you right now. So Rondo Trader asked, who is they? Or Toronto Trader, I couldn't tell. So if you go to our search box and you type that in, you can find, oh, here it is, Stockhaven's classroom from 424, the people behind a promotion. And there you go. Watch that, and we cover who they are in that video. So, good stuff. All right, VPIG. Virtual Piggy Incorporated. What a great name. This definitely sounds like something Thomas would eat. So, really nice uptrend. Would have liked to see volume be a little better today. For the same reasons I talked about with GWBU. Same thing applies. But this is interesting. This is an interesting chart. Let's see how far back it goes. I mean, we're at all-time highs. Okay, so at all-time highs, and it's been up 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. So key support is going to be this high here. I'd like to see it hold this prior resistance zone. We all know why. That's 98 cents to $1.02. That's our key support. Let's look at the 15-minute chart to plot some resistance. Okay, now the problem with this is it looks like a pretty illiquid stock, except for maybe some larger blocks here the other day. But something might be brewing with this one. It's definitely one to keep an eye on. But again, the volume is really low. 240,000 shares traded today, so that's only about 240 grand versus GWBU, which is traded a couple $1 million yesterday. So we talked about support. As far as resistance, it's going to be today's high of 109. Above 109, it's then 115. And also, this stock has put in a higher high or a high equal to the prior day's high every day since April 19th, it looks like. So therefore, the day that we don't put in a higher high, you want to take notice of that because it could be a sign of a potential change in trend. EEDG, some good accumulation the last couple days. The volume is lower. And remember, when I say volume is lower, I'm saying, I mean that it's lower in regards to stocks I personally typically like to trade. The volume on VPIG the last couple days is actually very high relative to its average. The volume on EEDG is very high relative to its average. Okay, so I don't want to confuse anybody when I say the volume is low. So in terms of liquidity for the stocks I typically prefer to trade, the volume is low. It only traded about $40,000 today. Did trade more volume yesterday. But again, this is 3 stocks in a row now. GWBU, VPIG, and now EEDG, where we're seeing good price action, but it's coming on low volume. So that means we're moving high on low demand and even lower supply. And you guys already pointed out, the problem with that is it will only take a small increase then in supply to potentially change this trend. Now, some simple things going on here. Higher lows, higher highs, every day of the week so far. So we want to keep that trend going tomorrow. Today's low was 1.3. Okay, today's high was 2.1. So resistance is at 2.1. Now, let's look at a weekly chart and go back a little more. Highest volume on a weekly basis for this stock in its history. That's a good sign. I'm liking everything I see here from an accumulation perspective. What I don't like is I don't really want to be buying at 2 cents when the majority of the volume traded at, let's see where it traded yesterday. So the majority of the volume traded here between 1 cent and 1.2, 1.3. So we don't want to be dummies. We don't want to be the guys, we don't want to be the chumps. We don't want to be putting 70% to 100% profits in people's pockets. Now, if we can get EEDG closer to where all of these people got it, then that's when you could initiate a position using this level, you know, today's low as a stop or a reference point. Or if we see enough volume come in, say we trade 10 million shares tomorrow and we break 2 cents, that would tell me that that would mean that we had enough demand come in to wipe out what's going to be future supply, okay? Because this demand here is going to be future supply at a later date and likely very soon, since they're already up close to 100%. So let's let other people do that work for us. Let's let them put the profits in their pockets, and then we'll jump in the trade once that previous demand, which is going to be future supply, has been wiped out. That's the way I would prefer to play it, okay? And if we get that, there's no real volume in the past compared to this volume here. I guess we had some volume on this day, so 315 would really be the next resistance, because that's the last time we had any substantial volume trade above the higher price. So this is definitely one to keep an eye on. And I know who submitted scanner, so keep it up, because you're definitely learning how to use your scanner if you're catching a stock like this. So this is definitely one to keep an eye on. So yeah, only real volume I see is this day here at 3 cents. So that would be the next high. But again, we want to exercise some patience, and we want to see more. It's like being a talent scout at the NFL Combine, and you see this player, and he looks great, right? He looks great in the workout, and you've got a high draft pick, but you want to wait. You want to see him work out more. Okay, you want to make sure if you're gonna take him high in the draft, you want to make sure that he really isn't just a one workout wonder. Okay, you want to see him in different situations. So EEDG, that's what comes to mind. I want to see more from this name. It's showing me some good promise right here, but let's see if it can follow it up with some follow through. EEMS. I don't think that's the right ticker. Okay, good. EMMS. Really parabolic move, about 100% move in a matter of 6 days or so. Nice low volume pullback today. I like the way it held near the top of this range, and it gave us a support level to watch, 143. Okay, 143 support, 171 resistance. This is a good example of a stock where you might be being greedy without realizing it. So say you get in this stock around 160 and you say, oh, I just want to sell at 170. On the surface, that doesn't seem greedy, right? You just want to make 10 cents. You just want to make, 7% profit. That's not being greedy. However, you need to put it in perspective of what the stock has done recently. It's gone from 80 cents to $1.60. It's gone up 100%. So while you might not be being greedy with your plan, you're being greedy in asking the stock to do more than it has already done in the last week. Okay, so you got to be careful when you see these big runs. You got to think, well, what's realistic for the stock to do over the next couple days? Likely what needs to happen is it needs to work out some of the kinks. We've seen this with ADMP. I emphasize being patient. It made a big move higher, and it's been consolidating. It's been going through the supply-demand equation, and it's working itself out, and we'll potentially see another bigger move at a later date, okay? And that's why I'm still watching it. EMMS, to me, it's the same type of setup. Great move. I believe this is all-time highs. Okay, no, it's not all-time highs, but still a great move, but we want to just wait, and you can see where we're getting resistance from is at prior support, just like we do so many times. And you can see that this resistance level was broken, and then it acted as support here, and now it broke through again, and now it's acting as resistance again. So this level here, the low is at 187, and this high was at 172. Oh, excuse me, the low there was 159. Huh, look where we closed, at 159. Just a coincidence, maybe not, who knows. So that's why you want to pay attention to prior lows and prior highs. Okay, so resistance, we just talked about that resistance point, and then this high of 171, 172 was yesterday's high. So that would be our next resistance point. Above that, we have this high here at 185, this low at 192, and then $2. As for support, we have the 143 low, and we also have this afternoon low at 150, which is closer. Some good charts sent in today. Good stuff. A lot of uptrending stocks. Okay, Apple. Popular name as always with people in the big boardroom. So Apple has started to fill this gap, and we talked about on Monday or Tuesday, no, what would have been Tuesday, I believe, wanting to see it hold around the 580 level, 575 to 580 level. That's what we're seeing right now. We've got this low at 578.86, okay? Apple, in my opinion, presents what is now a good risk-reward scenario, because we held support where we wanted to hold support, which is at yesterday's low of 578.86, sorry. So now we can go long Apple in the options market using yesterday's low. Well, it's going to be 2 days prior come tomorrow. So using Wednesday's low as our stop loss point. So I like this setup on Apple here. The volume is still very, very low. Okay, so just not a lot of interest at the moment either direction. That is a slight cause for concern that we had such high volume on Apple and now the volume's really dropped off. So, and the price fell, which tells me it pulled back on low supply because there was even lower demand. So the red flag here is that if supply just picks up a little bit, we already know there's low demand as evidenced by the volume and the subsequent price action. So then that's when the price could really drop quickly. However, the flip side of that is if we see demand pick up and we possibly get another 28 to 30 million share day to the upside, then we could really see a nice solid move higher. Okay. Bottom line, yesterday's low is key. Below yesterday's low, that'd just be a little tricky to me. I wouldn't like seeing it go below yesterday's low, and I would expect maybe a move lower towards the 550 range if that happened. If it wasn't able to hold 575, I should say, below yesterday's low. On the resistance side, we did go above the prior day's high for the first time since earnings, since this big move higher. However, we didn't hold on to the gains. So that's disappointing. And it closed at the low of the day. So at one point it had given a buy signal, but it closed at the low of the day and kind of negated that signal on the daily chart. So let's look on the 5-minute chart, what's going to clue us into Apple. You can see we had 1 million shares trade yesterday, the day it bottomed at that low that we're watching, and then we had 725,000 shares trade within the first 5 minutes today. So it's not surprising that Apple gave up its gains. Why? Because the volume we needed to see within the first, if you would have asked me about Apple coming into today, I would have said we need to see greater than 1 million shares within the first 5 minutes to wipe out that previous supply, which is previous demand, which is going to become future supply. And we didn't get that. The volume was lower today. So as the daily trend has already pointed out to us, it is falling on low supply. So we need an increase in demand. And our 5-minute chart of the last 2 days told us that today, even though the price had risen, it wasn't on the demand that we needed to see relative to the day before. So tomorrow, I want to see as close to 1 million shares traded within the first 5 minutes as possible. And I'm going to write that down right now because I'm going to prepare to trade Apple tomorrow. So I'm going to say Apple bullish bias if greater than 1 million shares trade within the first 5 minutes as the price is increasing. Okay, so that's my first step in being ready for the trading day tomorrow. All right, so as for resistance, Apple looks like it's downtrending a little bit on the 5-minute chart from today. Okay, so we need to break above this resistance line, which is going to be right around this high also, which is our most recent high. Okay. So just when you chart things like this, it's funny how coincidental things will seem. That's right around 583.50, okay? And if we can do that, then we'd have this high here at 586, and then this high here at 589, and then the daily high at 591.40. If Apple breaks 591.40, I would expect 600 to be a magnet. ALXA, not going to spend too much time on because we talked about it yesterday. Up, and this thing is tanking after hours. Okay, hope nobody threw money away on this one. Warned people about this stock yesterday in yesterday's class. Can't even cover it because it's at 38 cents, and that's going to be an all-time low for the stock, I believe. So just, yeah, maybe it'll bounce, but you know what? This just isn't a good... We talked about yesterday. This just didn't look good, and here's the result. All right, guys, so that wraps it up. Overall, with the exception of ALXA, I think we had all uptrending stocks. Let's do a recap. DOMK, uptrending. Under Armour, uptrending. GWBU, uptrending. VPIG, uptrending. EMMS, uptrending. What was the other one? EEDG, uptrending. Apple, just kind of neutral at the moment. In a short-term downtrend, but overall, you know, in the long term, definitely in an uptrend. And then ALXA obviously is in a downtrend. So 6 for 8, that's very good. And I would expect people to make some good money tomorrow because we're looking at uptrending stocks. So and according to WooBag, I think the world is out to get him. That's what it sounds like to me. So stay away from WooBag, guys, because the world's out to get him, and you don't want the world coming to get you. All right, guys, everybody have a good night, and let's finish the week strong tomorrow. I got a lot of lovers in here.